What's up guys, and welcome to a brand new weekly episode of the Steadily Stocks Report with your host, none other than Talos. And today's weekly topics is actually going to be a kind of a shorter episode today, but there are some epic news in terms of the highs and lows, of course, of this week that we're going to discuss in this video. Now, of course, let's go flip over into exactly what those are. Obviously, right over here. Obviously, we're going to follow up, of course, with my boys, Talos Energy, see what's going on with them. I kind of had to hide some of the real-time, I guess, percentages and whatnot because for some reason it's not loading up right now. But we will be going through some of the charts in all of these divisions here. And, of course, following up, we're going to go with NIO. A big up, of course, with NIO this week. So we'll talk briefly about that. And there's some news with Google, but not the entire Google. But we'll talk about that once we get into that news. We got a new IPO known as Karo, or in this case, Karooooo. You'll see why when we get into that. This is actually IPO, I think it's actually IPO'd yesterday, according to this recording session. So we'll go into that and why that one is currently a up in our charts. Another one that IPO'd last week, but now has been doing pretty well. It's a company known as Vizio, so we'll follow up with that. There actually weren't that many lows this week. The only lows that we had, of course, was UnitedHealth, but of course, we'll talk about that as we get to it. Bottom three finishing it off is Chicken Soup for the Soul. So what does that company do? I guess we'll find out. And then ROKU, you guys know ROKU already. And FUTU, yeah, that one. But yeah, let's go talk about real quick on Talos Energy and see where they are right now. They're actually doing pretty well today, in fact. So we roll into the charts. This is actually the 5-day history of Talos Energy, and they were doing pretty well for the most part. They were kind of sitting around the $12.40 range, kind of chillaxing. They actually went down to as low as $12, and then he spiked right back up to almost $13. So guys, you guys are keeping and maintain the energy. I love it. Keep up the good work in Talos Energy. Now, the other big one that obviously I follow is a company known as NIO. They also are doing quite well this week. They went early in the week. They were about $35, I think. Yeah, 35. And they started high today at around 41, but they have dipped down quite a bit to almost the $39 mark, which is not a huge drop compared to where it was early in the week. And of course, they are doing quite well. And as a curiosity, I want to see how Tesla is doing. If NIO is doing well, typically Tesla is also doing well. Yep. Exact same chart and projection. So like it's almost like a one-to-one. So if you guys are into like electric vehicles and if you just cannot afford Tesla, NIO is definitely a great alternative. So definitely check them out. But if you guys do want to get Tesla regardless, definitely check out today's sponsor for today's video, our boys over at Public Stocks. Now, Public is a great app that we use right here in the Steadily Boys community channel, as well as in the collective community channels as well. And we want to pass that along to you guys so you guys can own a slice of Tesla yourselves, up to $50 in fact. So definitely check out the affiliate link down below. Click that link, supports the show as well. And of course, you get your own piece of Tesla, as well as any of the stocks mentioned in today's video. But nevertheless, let's move on to the next topics. Now, Google has been in the news recently. Obviously, Google in itself is doing amazingly for the past, like, just check out this chart right now for Google in general. Google was like right around 2,000, and now they're like 2,100. They also have two different ones. They have this one as well. This is more of their C class stuff. So typically, if A goes up, C also goes up, and they're usually in the same ranges. So, but the reason why they're new is because of their self-driving division. Now, the alphabet behind the Waymo self-driving unit, the CEO has stepped down from that division. So, according to this article right here, the head of Alphabet, aka Google, self-driving unit Waymo, said on Friday he'll be stepping down as chief executive and would be replaced by a pair of executives. So 2 people, I guess, for the price of 1. So John Krapsik, a longtime auto industry executive who has headed Waymo for more than 5 years, will stay on as an advisor though. So that's a good thing. This is a choice that John has made after a long and successful career in the automotive industry. Now, for those that have been following Google, at least in terms of the self-driving aspect of it, they haven't made much strides in terms of like getting a product out into the consumer market as of yet. But it looks like they're still working on that. Google has a very interesting track record in terms of like releasing products and whatnot. Obviously, if you guys remember Google Glass, that was a prototype, never came out. And now they're working on this self-driving car, still hasn't come out. And if they're trying to compete with Tesla, right now they're way behind in terms of the curve. As an investor into the market, I believe competition really drives innovation. And right now we still need someone to really compete against Tesla. Yes, we have other companies in that field, but Google, of course, has the money, has the backing, has the influence to really to sway some of that market away from Tesla. Because right now Tesla is definitely, it's like they're the godfather right now of electric vehicles and self-driving in general. And right now there's no one that really comes close to Tesla. And the only ones I can think of that could potentially compete against Tesla is, of course, the powerhouse that is, of course, Alphabet and Google's influence. But obviously that's still to be said. There's still no word on how the progress is as of right now. But if you guys do know more about it than I do, definitely let me know in the comments down below, because I'm very interested to see their progress in the self-driving field. We need some competition. We need some innovation. Right now, there's not much innovation happening with Tesla. They did so well with the S model, but right now, like, I feel like, I don't know, there's not much spark happening right now with Tesla because there is no competition. There is no one that's in its level. Credit, of course, goes all the way to Elon Musk for his innovation, his push into that field. But right now, we need some competition to kind of drive some more of the influence, more of that spark, and to kind of push that into a better direction. Because obviously, like I said before, competition equals innovation. Now, a company that just IPO'd this week, actually yesterday in fact, is a company known as Karooooo, or Karo. And the reason why is, if you look into the company itself as we flip over, that's exactly what it's called. Karooooo. With not just one, not just two, but 5 O's after it. But regardless, it's doing quite well this week. In fact, plus 21% this week. So what is this company? Why should we care about this? And like, why did it go up so much during IPO week? All right, so this is basically what Karooooo is, or Karooooo is. It announced the pricing of its initial public offering of initial shares. Karooooo is issuing an offering 1,050,000 of its original shares as initial IPO pricing of about $20 per original share for an original gross proceeds approximately of $29.4 million. So Karooooo, headquarters in Singapore, is a leading global provider in the telematics industries that offers real-time mobility data analytics solutions for smart transportations. Karooooo serves customers in 23 countries across 5 continents, supporting more than 1.3 million subscribers as of February 28th, 2021. So they're actually a pretty big deal, and that's probably why it spiked up so much this week. So we'll definitely be in the lookout for this company in the weeks to come. It sounds like a very interesting company to keep in tabs with for the next couple of weeks to see exactly where they grow from here. But as of right now, they're doing quite well. I normally don't buy stuff at IPO. I don't know much about stuff. I wouldn't say this is a Talos pick of the week, but definitely consider just looking into it, adding into your portfolio to see like where it goes, especially if you're into that kind of industry. Now moving on to something else that IPO'd from last week. That company, of course, being Vizio. Now Vizio, of course, let's see here. Yeah, I can't find a 1 month ticker, but basically they kind of IPO'd around the $17 mark. And they're currently sitting at around $24, and they went up yet again this week. Not significantly higher, but definitely higher than it was. It was as low as $20, peaked as high as $25 earlier today. It kind of dipped a little bit today, but of course for the week is doing quite well. If you guys don't know, according to the description anyway, they are driving the future of televisions through its integrated platform of cutting-edge smart TVs and powerful SmartCast operating systems. It also offers a portfolio of smart bars which deliver consumers an elevated audio experience. So obviously, yes, they are stationed headquarters in Ocean County, California. And obviously I love Vizio. Vizio was like my very first TV that I ever got when I was able to afford a TV growing up. When I first heard of Vizio, it was one of those companies that were like, oh, they're super cheap. They might not be super good, because obviously cheap does not always mean good, but of course expensive also doesn't mean good either. But that first TV I got, there was a couple of pixels that eventually died out pretty I would say maybe a year or 2, 3 years later, something like that. But for the most part, that TV held itself and really surprised me. It was a 32-inch TV, which at the time was very, very cheap compared to like a 32-inch like Sony. Just as a time frame, I guess. This was back in like what, 2008, 2007 timeframe. And they really stepped up the game recently throughout the years. And they finally recently IPO'd last week, and they're doing very, very well. Either it's an 8K or a 4K, but it's like super cheap and affordable compared to other competitors out there, and they're still maintaining its strength in the television market. And it shows their strength right here through its IPO. Now, when you compare it to like other companies, like for example Sony, they specialize in other stuff, not just TVs. Almost in a way specialize in television technology and smartcast technology and stuff like that. They are definitely one of the leadings in terms of televisions. And of course, like I said before, quite affordable. So as a consumer, that's great and all, but how does that translate as an investor? Now, it's still very, very early. Right now, the current market cap is $4.47 billion. And their shares are only $24 per share, which is actually not that bad. It's hard to see how this is going to be in long term, because obviously if they would IPO maybe 5-6 years ago, then I would say definitely go jump in. But right now it's like in a weird area where they're already a $1 billion company. What else can they do? I would imagine hopefully they'll expand to other industries out there, not just like their sound bars and televisions. And if they do that, then I can see they're definitely growing even higher than that $24 per share. But right now, initially, I just don't see I don't see the future and growth of this company right now, and how much further they can expand. But obviously, we'll definitely keep a watch out for this. It's a great company. If you guys do see the potential future of it, consider getting it right now when it's still relatively cheap. Now, we'll actually do like a little sidetrack right now. There's only one company right now like that I kind of want to talk about that's been on the lows for the week, and that of course will be UnitedHealth. Now, UnitedHealth is typically a pretty good company for the most part. Obviously, they are dedicated to helping people nationwide live healthier lives by simplifying the healthcare experience, meeting customers' health and wellness needs, and sustaining trusted relationships with care providers. So obviously, they do a lot of stuff like that. They're doing well for the most part. They're sitting at around $367 per share right now. But as we flip over the chart, this week, they haven't been doing so well. They were sitting as high as almost with 380. Dipping all the way. They're still dipping further and further actually, and they dipped as low as $366 from, like I said before, 380. That's a big dip this week. So what is going on with United Healthcare? Out of curiosity, I want to see what it looks like for the past 3 months. Past 3 months, obviously doing quite well. You know, they were as low as 325 roughly. Kind of up and down struggle right now. But let's look at a longer history. Obviously, max history, very, very nice. Obviously, anything with healthcare, usually it typically does quite well in the long term. So if you're looking for a long-term investment, this is definitely a good one to use. Just by looking at the charts right now. Imagine getting it at like $20 per share. Of course, this was back in 2009. Obviously, healthcare is always needed. Obviously, need more nurses, more doctors out there. Also, provider of like distributing out that vaccine around the world. As we look at the consensus, for the most part, it's mostly in the buy. 10 strong buys, 1 buy, and 3 holds. But for the most part, it's pretty much on the buy. So obviously, long-term great, short-term maybe great too, especially during this dip. But we just have to wait and see. But I'm curious to see exactly why it's been on the downcline. There's really no articles I can find that will explain this dip right here, except for the fact that it just might have been overvalued. That's my only observation of what it could possibly be. The fact that it risen so high from what day was this? February 2021 up until March 28th. Yeah, so that whole entire March it just went up. The only thing I can think of is during the month of March is increased like distribution of that vaccine going around, and of course that just generated the hype and acceleration to go as high as it did. But now a lot of people, especially investors, are seeing that this might be a little bit too overvalued at the right now. So that's why they're doing that quick sale, and maybe even profits as well. We just have to see how this goes in the foreseeable future to see if this continues to drop further down to maybe kind of balance back out, because the previous high was around 370, and obviously, I think that's about where it should be at. So we'll see if it kind of dips back to 370 or even 360 at the possible lowest. So I would definitely hold if you have it, and maybe even just wait and see before you buy in. See how it goes next week before you consider buying if you're interested in this stock. But now we rolled into the final 3 topics. These are the final highs. Some of them are significantly pretty dang high. And we'll definitely get into that as we roll into the next one. This one is actually a very funny company name. Obviously, I never heard of this company ever, so I know nothing about this company. But this is called Chicken Soup for the Soul. So the description they basically make its video content available to consumers globally through television and online networks, including its online affiliates, aplus.com. And Chicken Soup for the Soul Entertainment is based in Coscomp, United States. And let's just take a look at this company real quick. Obviously, let's look at the 5-day history first. And you can see exactly how much growth this company has. Huge growth in the past week. Huge growth. They were like as low as $20. Almost now, they almost broke the $30 mark before they started dipping down again, kind of trailing down towards the end of the market day. But if you guys look at the 3-month history, definitely a roller coaster. They were as low as about $18 right around January 4th, and they went as high as even $32 back in February 11th. Max history though, like they're actually doing quite well in the later half of their year. July 2020. July 2020. I wonder why. Video content, online content, huge spike. If that rings a bell, you guys know what I'm talking about. But because of the situation that happened last year in 2020, video content spiked up, and so did this company. So if you would have bought them before, or even before the lockdown, they were sitting at around $7 only. $7 only, and they're currently at almost $30. So that is an amazing growth in the past. What is it? Almost year growth, and they're sitting at a mostly buy rate. So obviously interesting company. As a Talos pick though, I would hold off. Like this is one of those companies where like maybe they're only good because of what happened last year, but we'll have to see where this progresses. I don't even know what stuff they actually make, but we could do a quick search on some of the stuff that they have made. All right, so this is their website, Chicken Soup for the Soul Entertainment. These are some of his affiliates: Scream Media, Chicken for the Soup Originals, A Plus, Landmark Studios. I'm curious to see what they made. Okay, here's some of their series. Going from Broke, Chicken Soup for the Soul, Animal Tales, Chicken Soup for the Soul, Hidden Heroes, Vacation Rental Potentials, Being Dad, and The New Americans. And of course, Project Dad. Follow 3 celebrity dads navigating the balance of parenting and their full-time careers. Interesting. I haven't heard any of these shows, by the way. Let's see what else they got going on. They got Nicolas Cage apparently in the Grand Isles. The man who killed John Q something. Apparently they had the guy from Star Wars. Safe Haven, Gangsters Rap. So yeah, they're pretty much a distributor and publisher. I'm not sure if they're like in like Netflix or anything like that, but they might be. I would imagine either Netflix, Hulu, or something like that. They'd be making original content such as this. If you guys are into that kind of stuff and supporting like smaller companies like this, definitely consider them. So they're looking at big names to like look at their movies and whatnot. So yeah, definitely guys, interesting company. And I thought it was a funny long name, actually one of the longest names that I've seen of a company in terms of a stock. Moving on to the next one. The next one, of course, something we all know about is Roku. Roku is involved in creating streaming platforms for delivering entertainment to the television. So they operate primarily in the United States, Canada, the United Kingdom, and the Republic of Ireland, Mexico, and France. And check this company out. This is actually their max history right now, and they're actually doing quite well in their max history. So they were sitting at around, what, $43? So this is back at 2018 actually, or 2017 time frame. And they were like $29, and they went crazy up. They started going up right around, I bet you it's 2020, yep, July 2020. So streaming has gone through the roof, guys. So if you had invested in Roku back in, I'll say, April 2020, they're only sitting at around $110 or whatever. You just got 3 times your money right about now. But they have went down since then. So they're kind of sitting around 330 right now from their high of around 400. But let's look at their 5-day history, because that's what we're all about here. 5 days though, they're doing great in their 5-day history. Sitting at as low as 295, and they went as high as the opening day for around 340. They have kind of dwindled down a little bit throughout the day, but for the most part, throughout the week, great growth there. And obviously, streaming like we talked about before in the with the chicken soup thing, streaming has been huge because of what happened last year in 2020, and I don't think it's gonna stop. Like obviously people are kind of sick of being at home. They probably want to go out to the movie theaters. That's why I still feel like IMAX or AMC's or any movie like theaters out there, they're probably gonna have a boom eventually when big movies are coming out. I've seen one particular movie that's coming out, or that might be already out: King Kong versus Godzilla, the battle of the giants. Mortal Kombat's another one. Spider-Man, No Way Home, Venom 2, The Eternals. I'm not sure if they're all coming out this year, but according to what's in Google right now for upcoming 2021 movies, it looks like they might be coming out, and it looks like it's going to be a pretty good card this year, especially if they're out in movie theaters. What I noticed about movies nowadays is like they're kind of like half and half, where they do like select movie theaters and then they also do streaming as well. Like for example, HBO Max is a good example of this, where they released a movie in like theaters, like IMAX theaters, but they also it's also available in their HBO Max. Other companies are also doing that as well. I would imagine Disney Plus might be doing some similar stuff with their Disney movies. Now the final company I want to talk about real quick, the final company is a company known as Futu. I think that's how you pronounce it. This is the first time I ever heard of them, but let's just read about it, see what they're all about. They are a technology company which offers a digitalized brokerage platform. It is primarily engaged in the online brokerage service and margin financial services. It provides investing services through its digital platform and an integrated application accessible to the mobile device, tablets, or desktop. Another investing app, and they're actually doing quite well this week actually. So let's look at the past 5 days. Past 5 days, they were sitting at as low as $119, spiked as high as I want to say about 161. They have dipped down throughout the day, but for the most part, for the entire week, they're doing pretty dang good. Pretty dang good. How long is this company? Is this a new company? Yeah, they're actually relatively new. I guess they IPO'd around May, maybe April 2019. They haven't had much growth whatsoever for almost a year. They were as low as like $19. Really? $19. And they only recently spiked up around November 2020. If you really want to make it a theme of today's episode, May 2020 is really when to start seeing some growth, because people are home, people are bored, people got their checks, their stimulus checks and whatnot, and they're investing more. And companies like these actually prosper from that alone. So there might be a lot of companies that might have fell during the lockdown, but there's other companies that also got a lot of growth from it. So it's kind of like that pros and cons of like either digital media and physical media, or physical interaction. And that is one of the growths here. So obviously, as that vaccine starts to spread to people across the United States, will that event affect companies like this and start dipping right back into its lows? Yes and no. We'll definitely have to wait and see. But as of right now, definitely be on the lookout. If you guys have invested with this back in the earlier days, congratulations, you just made a huge amount of profit from what, $10 roughly to $150. Guys, craziness. And this has only been a year, like about a year. So great growth here. Obviously, they're staying very competitive to other companies like Public and Robinhood and stuff like that. So yeah, just another source right now. Obviously, we're not sponsored by this company, but as someone who is an investor, like this actually might be good to kind of like look into. And guys, Futu, if you guys want to sponsor us, hit us up. But that pretty much concludes everything in the market this week. Kind of a slow week, not gonna lie, but a week nonetheless. And of course, some good Talos picks for the week obviously is Vizio. Vizio is a great one to have. UnitedHealthcare, if you're able to afford it at that current price range. ROKU still is a little expensive, so definitely watch them. But if they keep expanding what they're going from what they have right now, then we can definitely see ROKU definitely expanding further as well. But yeah, guys, that's pretty much all I got. If you guys haven't already, be sure to check out our sponsor for today's video, Public. Grab those slices of your stocks. It also helps support the show as well. And if you guys enjoy this and want to see more of it, consider giving us a like and subscribe, support the show, and we'll definitely see you in the next video, the next week of the weekly Studly Stocks Report. This is all I got. So until next time, this is Talos signing out.